Okay, folks, we are live and welcome to Sunday Night Futures Live. This is Bob Desmond and welcome to a brand new trading week. What we're going to be talking about today are a couple of things. One, the election. Who's going to be the winner and who's going to be the loser? We'll talk more about the winners tonight. We'll talk about the losers some other time. Not tonight, probably, because I don't have time. But we're going to be talking about three sectors that I like: crypto, defense, energy, and the financials. We also have some news that hit the wires over the weekend. We had the Iranian attack on, the Israeli attack on Iran over the weekend, and we're going to look at the price of oil, which I'm actually looking at right now. I have an advanced order in on oil, and we're going to take a look at that now. So why don't we get started? And let me share my screen. Oh, by the way, Sober October. This is the last weekend. Mission accomplished so far. But it was a really good month, a very healthy month. Down about 7 pounds. Another 4 days to go. And Friday night, nice Japanese single malt, perhaps a nice fine cigar as well. God willing. All right, let's get to it. Let me share my screen and let's talk about the markets. Now, what you're looking at here is a chart of oil. Oil is gapping down. So what you have here is a sell the news event on Iran being attacked by the Israelis. There's no anticipated counter strike. So what they're doing is they're taking premium out of oil. So I have an order down here, as you can see. I'm going to speculate that we're going to get a bounce here. This is a 15-minute chart. Big volume to the downside, as you can see. Lots of sellers. Right now, we have 85% sellers on volume. So that is institutional distribution at current. Where I have my order is right at support. All right, I'm going to leave it there. I'm not going to chase it. I want it to come to me since it's getting beaten up. Let's take a minute. Let's talk about the 1-minute chart. I want to know if they take out the highs of the session. And I guess they'll tell me if we take out the lows of the session because I have an order down there. Okay, let's see how this plays out. Looks like they're going to take it down. That's my guess. We're down about, wow, on crude oil, we're down nearly 5.33% at the open here. That's a huge move. Let's see what contracts they're selling here or trading. They're doing the December contracts. Let's say hello to folks as we watch this unravel. Franklin, welcome. Thank you, sir. Thank you for the audio check, as always. Mr. Tim, welcome. Polish Taco, gentleman and a scholar, welcome. Larry, likely Israeli situation will wrap up after November the 5th, and oil will jump to 100. Israeli situation will ramp up. Oh, you're saying ramp up. I'm sorry, wrap up. I read wrap up. Could be. I mean, if Trump gets in, they have a green light to do whatever they need to do. Talent, hey, brother. Tom Lou. Hi, Bob. Trump win will make Sobo pipeline moving higher. Sobo. Is that a stock? I'm not familiar with that. George, welcome. All right, let's get to it. So oil gapping down here. That's the big news at current. I think that this is an opportunity, to be honest with you. I just want it to come down to my support level. Let's move on. I'll obsess about this. I don't want to obsess. Let's take, since we started with energy, let's continue down that path. Let's go to nat gas. Nat gas down 3%. So we're getting premium taken out of energy due to what appears to be a hiatus of tensions over in the Middle East for now. Let's take a look at the US dollar. The dollar is up, no great shock there. We're going to be talking more about the US dollar in a moment. What else do we want to talk about here? Let's go equities. You know what? Let's stick with commodities. Let's stick with commodities. Gold. Gold is down, no great shock, gapping down. So they're taking premium out of the commodity space today. Silver, my guess is same deal there, down about a third of a percentage point. Agriculture. Soybeans moving up fractionally. Corn. You know, I want to go back here. I want to take a look at the weekly chart. I trade soybeans quite often lately, but not corn. So I don't know how it closed out the week. Okay, it was an okay week. Let's check out soybeans weekly close. And this just gives us a vibe of what kind of quality of trade we saw last week. And it closed up, but it faded off the highs of the week. Let's check out wheat. Is that ZW? Yeah. Not a good week last week, but it is up at current fractionally. Let's check in with the NASDAQ. Wow, we're gapping up here. This is interesting. Now, on Friday, I took some longs off the table. Valley National Bank, small profit there. I don't like the regional banks right now. I don't like the way they closed last week. Now, I mentioned to members that if the NASDAQ is going to be saved, they need to gap it up tomorrow above resistance. We'll talk about that level in a moment. But the NASDAQ did not have a good close on Friday. The whole market, the Dow Jones Industrial Average, weekly time frame, S&P 500 weekly time frame, all of them broke weekly support levels. But a strong open here. Russell 2000, that's up nearly a half percentage point as well. They may be gapping these up on the easing of tensions over in the Middle East. But I don't believe that the Middle East has been any influence whatsoever on the equity markets. Now, you could argue gold and the dollar, that correlation, that could be as a result of the Middle East tensions. But other than that, We've already seen the beginning of what I believe is a correction in the gold stocks. We're going to talk about those in a minute as well. Let's talk about the Dow Jones. Up over a third of a percentage point at the highs of the session. Just keep in mind that we had a rough day on Friday. So this could be a bit of a bounce. Let's check in with the yields. Yields gapping. Wow. I'm not surprised here that yields are gapping up. We spoke about this over the weekend that yields closed out the week last week very, very bullish. But the fact that you have the equity markets, especially the Russell 2000, rallying with yields spiking up over 0.75%, something's going to give here. I don't know what it's going to be. It's either going to be yields pulling back, retesting the weekly breakout point, or you're going to get a pullback in at least the small caps, mid caps, the Dow names, the mega cap NASDAQ 100 names. They can continue up higher. But the small caps, I'm not buying that. Not with the yields spiking up. Let's check back in with agriculture. This trade here is one that I like, and this would be a short of live cattle, which closed very strong on the week last week. A short of live cattle. If it appears that you have a presidency of 47th President Donald Trump. If not, I'd be a buyer of cattle if you get a Harris presidency. Did I cover all the? Now, what I didn't cover was volatility. Now, volatility gapping down here, big gap down. Now, for context, last week we saw a bullish key reversal on a weekly chart. We saw a bullish key reversal on a daily chart on the VIX. So let's see whether or not this knee-jerk reaction is an accurate reaction by the markets. It's going to be interesting to see what we wake up to tomorrow, because somebody's going to have BS called on them. Either it's the bond market and bonds are going to rally and equities will rally along with it, or equities are going to fall because yields are climbing. It's going to be an interesting morning. Let's check back in with oil. To me, that's the chart of the evening. Now down about 4.75% coming off the lows of the session. Our order did not get filled. Now, if they reverse this and they take this above the highs of Friday's close, you're going to see a rip your face off rally on oil like you haven't seen in a long, long time. So beware here. I'm going to let this settle down, but there's a very, very good chance I'll be buying oil this evening on this pullback. I just want everything to settle down. Ideally, my order gets filled where I want it to. But if I see a good setup, I will enter the oil trade on this pretty nasty pullback. You don't get these pullbacks often. Okay. We did gold. I feel like I'm missing something. I feel like I'm missing something. Oh, we didn't go over euro. Euro is down. This is probably going to get worse. I'll tell you about why in a moment. The 4-hour chart, they're rallying it off the lows. So the topic I'm going to talk about in a few minutes, T's, could have been already priced into the euro. Let's check in with the Japanese yen. Now, the Japanese yen, yeah, I expected this. The Japanese yen is cratering. They've had their first big change in government in like a ridiculous amount of time over the weekend. So the yen is catching it right on the chin. So my guess is, I'm not familiar with Japanese politics at all, but my guess is that the party that won is a big spending crowd, and they do not like high interest rates, and they don't mind inflation, which is exactly what Japan has at current. All right, let's take on some comments. Oh, Tom, Sobo is Keystone rename. Okay, I didn't know that. Sobo is a Keystone pipeline? Noted. We'll check out that chart. Can you validate that for me, please, Tom? TZ Burton. Hey, brother. Druckenmiller and Soros agree short U.S. bonds as U.S. rates only rise. But like gold, same as the Bank of England in 1984. Yeah, I saw that Druckenmiller put on a short of U.S. Treasuries. And that's honestly, it's my worst performing position right now. It's long bonds. Why did the market shoot up here? I think it's a knee-jerk reaction to you have the attack by Israel on Iran. Now, I posted the article on, I believe it was Friday night, and the expectation being is that it was probably a pretty heavy attack. In reality, it doesn't seem as if it was a very heavy attack, and both sides have put out statements that, that's pretty much it. So it's kind of a bit of a secession of hostilities in a way. So that's why you're probably seeing equities move up higher here at the open and energy prices move down, subject to change at any given time. Okay, so we did currencies. I feel like I'm missing something. We did volatility. We did energy. Maybe it was copper. No, it wasn't copper. Home heating oil. That's down 3.7%. Got to get a fill up. Got to take advantage of this price. Very nice. We could have a head and shoulders setup here on home heating oil. Right now, we're below the neckline on home heating oil. Here's your head. Here's your left shoulder. Here's your right shoulder. We could be breaking a neckline on home heating oil. Let's see if that same pattern exists with crude. Oh, it does. Left shoulder, head, right shoulder. Lower highs. Okay. What else? Mid caps. What are they doing? Mid caps are up as well. All right. So really interesting open here. Not entirely what I expected, but it makes sense. The question is, do we chase this rally in equities? I don't think you can. On the Qs, I would watch for a breakout on the daily time frame. which you could not hold on Friday. Let's go to the first off. Let's go to folks. If you're not currently in our forum, you have the Bull and Bear Banter chat room. You have the feed here where I post a lot of information and trades. Sign up. It's free, and it's probably not going to be free this time next week. I'm closing it down to free users. And if people aren't commenting, I'm probably going to just close those memberships because we want to make room for those that want to contribute. So please, if you're not active on here, say something. We're able to track who's active, who's not active. So I'm just going to probably free up some spots so I can have more free people come in. So please say hello, share your information. There's power in information. And I want to take a look at the requests that have come in here. We have no requests tonight. I just put this up a short while ago. Let's do a refresh. Okay. Nobody's interested. Okay, economic calendar coming out this week. Nothing on Monday. On Tuesday, we get the Schiller PE ratio, not the Schiller PE ratio, God. We get the Schiller home price index, consumer confidence. It's a 10 a.m. report for you day traders out there. Beware, consumer confidence, 10 a.m. Don't get lured into a big trade in advance of that report. That can move the markets. 10 a.m. Also, job openings. Job openings have been coming down. Oh, it's a jobs week. It's a jobs week. Let's see how much they lied to us this month. Okay, so ADP employment report comes out on Wednesday. We get GDP for Q3. Wow, this is the first report. It's probably going to be a 4%, a 4% quarter. This is the last GDP report before the election. And man, are they going to revise these numbers down after the election? Jobs data, GDP is coming down. And let's keep in mind, the only reason why GDP is growing is because of government spending. No other reason. Thursday, personal income and spending. We get the Fed. Wow, this is going to be a volatile week for economic data. We get the Fed's favorite inflation gauge, PCE, initial jobless claims. We get that every week. And on Friday, we get non-farm payrolls. That is the pimp Mac daddy of all economic data. And remember the big beat last month, but it was driven by government workers. The largest rise in government workers, the second largest in history. So they're playing a little bit of politics with these economic reports. Buckle up for the revisions in November. ISM manufacturing comes out. Big week for economic data, but not to be outshined by earnings, folks. A big week for earnings. We have Monday. Not a lot happens on Mondays. Bank of Hawaii. I used to own that. Oh, no, I owned Hawaiian Electric. Ford, after the bell. Rambus. Rambus has a very special place in my heart. This is where the first stock I developed, the contrarian trader extreme oversold model of trading, and I did very, very well on that. Created a business off of that trade. Waste management. Tuesday, SoFi breaking out. A very strong chart, SoFi. PayPal, that's off of its lows. That's been rallying. Energy, BP, McDonald's, that'll be interesting. The government took their guns and shot right at McDonald's for having Donald Trump work there or do a publicity shot there. So that stock is down big. I think that's a buy. Pfizer comes out. That's a sell to me. JetBlue. AMD after the close on Tuesday. Alphabet. Chipotle. Visa. Eli Lilly before the bell on Wednesday. Humana, that stock has been clubbed like a baby seal over the past several months, I believe since the last earnings report. Cat comes out, Biogen, ADP, Microsoft, Meta, Coinbase. Is this right? I thought, didn't Starbucks report last week? Starbucks reported last week. Am I losing my mind? I even traded it off that earnings report. They increased their dividend. Yeah, they've already reported earnings. I think that's an error. That's an error. Starbucks has already reported. If somebody wants to fact check me on that, please do. But I believe they have already reported. Thursday before the bell, Uber, Merck, Altria, love Altria, MasterCard. So the reports out of Visa and MasterCard, they're going to tell us the true health of the U.S. consumer. Amazon after the close on Thursday. We're looking to short the XLY. The XLY is top heavy with big market cap names. Amazon, 12%. And I'm sorry, Amazon's 20%. Tesla, 12%. So Tesla's getting a little bit too big for its britches right now. We shorted Tesla on Friday, booked a profit there. I'm looking to reshort Tesla. Amazon, if they miss, I'll be shorting the XLY. And if MasterCard and Visa disappoint, I'll probably be shorting the XLY before Amazon reports. Apple comes out. Intel comes out. Big names coming out this week. On Friday, ExxonMobil and Chevron, Dominion Energy. A big week for earnings, folks. Buckle up. Thanks, Jay. I could have sworn they reported the other day. What the hell am I looking at then? It's right here on the 22nd. EPS 3.31. They have the same store sales. Adjusted BPS. This is 1022. I think they already reported. I don't think that's right. All right. Let's move on. CME Fed Watch tool. Let me bring, this is killing me right now. Yeah, they've already reported. Their next EPS date is 2/4. I think that's a typo. All right, CME Fed Watch tool. So, normally I just blow through this. I want to spend a minute here because I find it interesting. Not interesting, this chart here. They're going to get these. It's going to be a quarter basis point done, okay? But when we go out to December of 2025, the expectation is for a Fed funds rate in the range of 3.5 to 375. That's the probability of where we're going right now. So, but they're pricing in rate cuts every single month. Till then, that brings us down below. That would be more than 13 cuts. Less than that. You don't have a Fed meeting every month, but I don't think this is right. All right, it's just a gauge, but they're expecting right now for us to be between, let's say, 3.25 and 3.75 on Fed funds rate by December of 2025. Shoulder PE ratio. When we went live on Thursday night, this was 37 on the spot. Now we're at 36.99, even with the pullback on the S&P 500 on Friday. Now, the equity market is very expensive. And take a look at the S&P is reporting year-over-year earnings growth of 3.69% for Q3, which is the quarter that's being reported right now, which is below the estimate of 4.3 on September the 30th. Adding to that, 59% of S&P 500 companies have beaten revenue estimates to date for Q3, which is below the 5-year average of 69% and below the 10-year average of 64%. Now, to be fair, it's still early in earnings season. This week coming up is a big, big week. So we can't judge the earnings season quite yet, but this is just a pulse check for how this earnings season is rolling out. Now, one thing I'm very, very concerned about, we were long of the XLY, and I'm getting a whole bunch of messages. Okay. I forgot where I was. Oh yeah, so we were long of Valley National Bank, and I saw it had a beautiful day on Thursday. I expected some follow through, but no. New York Community Bank reported a 990% surge in delinquent multifamily debts year to date, marking 1.5 billion is not accruing interest in the third quarter. Nearly 20 billion of its multifamily loans will reset at market rates between now and 2027. This company and these regional banks need rate cuts, and they need them quick. They need to refinance a lot of debt, or owners of these facilities, they're going to be coming over with keys and handing them to these banks. So this is why I sold Valley National on Friday. We made some money, beer money. So I think this is priced into the euro at current, because the euro is down, but it's rallying off its lows. France had its outlook cut to negative from stable by Moody's. Now, France is either the second or third largest economy in the EU. So this is no joke to go to negative from stable. Now moving on to politics. Bonnie Bean, welcome. Here is, let me make sure I'm sharing my audio. I have to stop my screen share to do that. Why isn't these showing in the feed? I'm glad I just checked this. All right. Frank, and I posted like 5 o'clock. Oh, where did I post the stock reviews? In the feed. It should be in the feed. I see you put it in there. I'm getting your message now. It blocks the messages while I'm sharing my screen. All right, let me reshare. Let me make sure that I am sharing my audio. Okay. So let's get to it.
We need to bring 100 million votes to Donald Trump. Not 74, not 81, 100 million votes. Because if you bring 100 million votes to this man, you send this finger to the elites. We need to bring 100 million votes to Donald Trump. Not 74, not 81, 100 million votes. Because if you bring 100 million votes to this man, you send this finger to the elites.
So he's absolutely 1,000% right here that we need to win the popular vote. Trump needs to win the popular vote, because if he does not, he will not have a mandate to do what he wants to do. And you're going to see if they, all you hear from the left is that he's a threat to democracy. We don't live in a democracy. Nobody ever corrects these people that we don't live in a democracy. If you pull up a copy of the U.S. Constitution, do a Control-G to do a search of it, the word democracy never appears a single time in the U.S. Constitution. Fact check me. It does not appear. We live in a representative, we live in a republic, constitutional republic. We do not live in a democracy. So if he does not win the popular vote, all we're going to get are these ridiculous woke NPC bots running in the streets, rampaging yet again. And we really do need to win the popular vote. And as it stands right now, you have, this is all, I don't believe in these betting markets yet. I think they're manipulated, or they can be manipulated. But right now, in this snapshot in time, for conversation purposes, the presidential winner for 2024, Donald Trump, 65%. Winner of the popular vote, still by a wide margin, Kamala Harris. And the balance of power, 48% probability of a Republican sweep. So I would really love to see this improve. We have no historical data on whether or not this is very accurate or not. And there's many ways to manipulate this. You know, if you have a business that is influenced negatively by a President Trump or a President Harris, you know, you could hedge your bets here against your positions. So, or you could try to sway people one way or the other. So I'm not a big believer in the betting markets. I'm not a great big believer in the Real Clear Politics polls either, because they have a tendency to oversample Democrats. But you can see that going into the new week, you've got Harris up by 1. They were tied last week. Going into the new week on ABC, you have Trump, Harris up by 4, and TIP, I don't know what the heck that is, TIPP is still showing a tie. It's not showing Rasmussen, which is one of the more reputable outfits out there. That at last look on the 25th, it had Harris up by 1. I believe this is I don't know if this is the national or the expected out of the Electoral College. Let's take a quick peek at the senatorial polls. We're not going to go through all these. I just wanted a top-down approach of who is favored to take the Senate and the House. We don't have that. All right, so over the weekend, you had we had, come on, Jesus Christ, a meeting by the BRIC nations talking about, we're not going to spend a lot of time on this, Russia's landmark BRIC summit and this specter of de-dollarization. Now, I'm not going to go through all of this, but I spoke about this back when the Russians invaded Ukraine and we weaponized the US dollar, seizing assets of Russia. And if you want to keep your currency at the top of the totem pole in terms of being able to live the life of luxury that we do on a relative basis, even the poor in this country live a life of leisure relative to those people in poor countries that do not have a US dollar standard. Their currency is worthless. So We need to put things in context. And I warned of this. I warned of this back in February, March of 2022, whenever we weaponized the SWIFT system against the Russians. And sure enough, they're gaining steam. And what has me most concerned about, this is the only area I highlighted here, everything else is pretty predictable. Most Western experts, however, dismiss the idea of de-dollarization as unrealistic, if not downright impossible, given the greenback's long-standing position as the world's standard currency for commercial transactions. That worries me. First, most experts scare the hell out of me. Dismiss the idea of once they dismiss something, I get very, very worried, because we have been living high on the hog for way too long, and the complacency in this country is just mind-bogglingly. The arrogance that we have is just mind-boggling, and we have zero appreciation for the value, for what real tangible value, the US dollar being the preeminent currency globally, has brought us. So with our debt the way it is right now, if we lose that standing, even if it drops down a few percentage points, it hurts us dramatically. So TrendSpider, 60% off. Use the link below. That was an unplanned plug. So this is also off of Zero Hedge, the vampire fiat money system, how it works, and what it means for your wealth. This all has to do with the election, folks. It all has to do with the election, because what Trump needs, if he does win, he needs to be able to, believe it or not, continue to print money, and he will continue to print money. If anybody has any thoughts that he's going to stop printing money, forget it. It ain't going to happen. He wants low interest rates, but the difference between him and Harris is that Harris has no plan. It's whatever the deep state wants. What Trump wants to do is grow the pie. So he wants to take GDP. Right now we're at about 125% debt to GDP. If we grow the economy over the next 4 years by, hypothetical, 25% over the next 4 years, which is a lot. Okay, it's a lot, admittedly. That brings our debt to GDP down dramatically, and it reduces our interest rate payments. So we're able to grow our way out of the debt. Have we ever done this before? Yeah, we did. After World War II, our debt to GDP was about the same, maybe a little bit less than what it is right now. But what were we able to do? We were able to take our wartime production and turn it inward towards consumer goods and exporting goods. We became the manufacturing powerhouse. Well, we already were, but we were an even greater manufacturing powerhouse. That is what Trump is looking to do here and now. Be able to grow that manufacturing base to grow our way out of the debt. Yes, he'll try to cut the government. He's not going to cut as much as everybody thinks. Not going to happen. Not with the deals he's going to have to cut. He's probably going to cut a lot of jobs, but probably not a lot of the spending. He didn't do it the first time. Probably not going to do it this time. He will be cutting regulations. That's what's important. Cut the regulations and keep interest rates low. So I had an argument, not an argument, a heated debate over the weekend with, he's in finance. He's not a trader. He's in finance. He's talking about how the dollar's been so strong and how my attitude towards the dollar is kind of, I don't know, I guess I'm a perma bear in his eyes when it comes down to the US dollar, which in real terms, I'm not. The dollar is very, very strong. I admit it's probably going to go up higher from here in the short term, but longer term, it's going to go down lower. And when I asked him, what would you rather have right now, the US dollar in your hands or an ounce of gold, an equivalent of US dollars or gold in your hands, an ounce of gold or $27.50 to buy that ounce of gold? I thought I would take the gold. What would you take? He said, I'll take the dollars because they're more liquid. There's no carrying cost. Okay, fine. So I said, why don't we take a look at a couple of charts? And this is what we went to. First up was, here's the chart of the US dollar, monthly chart, looking pretty good, right? It's off of the lows of December of, what was this, 23? Yeah, 23, looking pretty good. We got higher lows. We have a nice triangle set up. We have more room to run before we hit resistance. Yeah, just looking at this chart, it looks like he's probably got a point. I mean, look at how far the dollar has run since 2014. That's pretty amazing. But the problem with being a banker, which is what he is that you can write loans, you can underwrite loans, but that doesn't give you a degree in knowing how to measure the buying power of the US dollar. It simply doesn't. You can review FICO scores or what are the credit reports for companies. I forget what they're called. Dun and Bradstreet. You can read Dun and Bradstreet reports all you want, but what matters is relativity. Relativity. You can't look at a chart of the US dollar and say, yeah, it's strong, and ignore relativity. So let's take a look at it from a different point of view. Here is the US dollar over the same time frame, monthly time frame, versus gold. Now, I'm going to pose the question again. Would you rather, and he's probably watching right now, I'm sticking to him again. Would you rather have owned over the course of the past 10 years the US dollar or the equivalent of US dollars or 1 ounce of gold? There's no argument here. And if you want to push this even further, all you need to do is look at this chart here off of Fred. Consumer Price Index for all urban areas, purchasing power of the consumer dollar in U.S. city average. This chart goes back to 1913. I'm going to pause there. What happened in 1913? Two things. Two things happened in 1913. I know there's a delay. I'm trying to give it some time. Okay. One, they instituted the payroll tax, the income tax. Sorry, not payroll tax, and Social Security. Income tax. Two, they created the Federal Reserve. Now, note how they won't go back any further than 1913, because I'll bet you we were up here or at least flat. And as soon as they created the Federal Reserve and they instituted the income tax, all you've seen is the steady demise of the US dollar. Mind-boggling. So, on the topic of gold, and we're going to go to the sectors I like in a moment. We're going to talk about charts in a moment if we get a Trump presidency. Newmont Gold reported, let's bring up the chart so I could show visuals. Bonnie being the winner. I noticed mine is selling off, and even ETF, then NEM reports earnings down big. The Nugget GDX selling off. Yeah, so what we did last week, right before the Newmont mining report, is that I saw that we were getting extended, and I didn't like the price action. Let me bring it up. I am a big watcher of candlesticks. We did NUGT and GDXJ we'll just talk about GDXJ. So we'll go to the daily chart. What day was it last week? Let me bring it up on stockcharts.com for a moment. GDXJ. Right here. The 21st. So on the 21st, we formed a filled candlestick, meaning we traded up and we closed up, but we faded off the highs of the day. And we did that right into the third standard deviation Bollinger Band in red. Now, when was the last time we saw this setup? Well, we saw it back here. And you got a bit of a correction. You saw it back here, correction. So not only did you have the filled candlestick, which is kind of like a sign of indecision or a fading of the rally, but we were also into the third standard deviation Bollinger Band. For those not familiar with what that is, this is just my own version of the Bollinger Bands. It just tells me that when we're not supposed to be somewhere and that we may want to get light, wait for a reaction to the downside, and look to live to trade another day. So we booked half profits on our gold mining stocks. I'm glad that we did, because I think that we're going to continue to move down lower. Now, I remain bullish on the gold mining stocks, and in particular, I'm very bullish about Newmont because they killed it on earnings. Gross profit has soared 66%. Let's go to the chart of Newmont to illustrate what they did to this stock. This stock is down like 20% in the past few days. Gross profit has soared 66% year on year and by 17% since the previous quarter. What's that all about? They sold it off hard. So they're still losing money, but that's not what this is all about. Gross profits here rising, revenue in blue rising, gross profit rising. Their net income, granted, they're still losing money, but things are clearly improving. Newmont's operating margin has soared 82% from the previous quarter and by 52% year over year. That's IBD top stock stuff. That's really good stuff. Operating income has soared 79% from the previous quarter and by 25% year over year. The gross profit has soared 66% year on year and 17% since the prior quarter. I think we already talked about that one. I mean, what's the problem here? I know their costs went up. Price to earnings, there's no earnings, so we can't really talk about that. Price to book has come in. I mean, we're not at extreme levels on price to book, and price to sales, we weren't at extreme levels. I think that this is a buy. Do I think that Newmont could still go down lower? Yeah, because the entire sector is probably going to go down lower. And in fact, what's going to help take Newmont lower probably is the continuation sell-off in the GDX, because Newmont makes up 12.5% of that fund. So just be forewarned. The largest position in GDX, I wouldn't buy GDX right now. I wouldn't buy Newmont right now. But soon, once they begin to bottom out, I'm going to be plowing money back into these names. I think they're out of their mind for dumping these stocks. Gold is at all-time highs as of Friday. What's wrong with this picture? It's the most hated rally I have ever seen. It's a bull market in gold stocks, and nobody wants to own gold stocks. It's the craziest thing. We did great in them. Let's talk a bit about the sectors that are going to do well and the whys behind it. So first up is going to be the energy sector. He's been talking about it constantly, meaning Trump. Energy. Let's go to beautiful close on Friday. Did oil close up the same? Let's just bring up oil really quick. Beautiful close on oil. Let's check back with oil. I did not get filled on my order. Well, we booked profits on palladium too last week. What's that doing? That's down fractionally. Let's go to oil really quick. It's still down about 4.5%, but off of its lows. I still may be buying oil tonight. Okay, back to XLE. So we know that he wants to drill, baby, drill. Let's take a look at the macro chart. And then I want to go to C's now. The folks, we're using TrendSpider, automated technical analysis. Use the link below. Get that discount from TrendSpider. Let's get rid of all these. Okay, better. Get rid of this one. So energy had peaked out. Ugh. Had peaked out back in April of this year. Now, we only have 4 trading days left to go in the month, but we're setting up for a nice rally here in the coming weeks and months, not on Monday. I don't believe that's going to happen. And even if we do break out by the end of the week, you still need to wait for a retest. You have time here. I would not go rushing into these names. And if Camilla wins, this is probably going to fall apart. I don't know what to expect if she wins. So let's take a look if we have any type of a Bollinger Band squeeze forming here. Let's take these off. Clean this up a bit. RSI. Let's just take them off. I didn't want to deal with this right now. Hold on. I'm going to bring up my other chart. That's my sandbox chart. I throw the kitchen sink at that chart. Here are our so we are setting up nicely here on energy. We're on a monthly chart. And take a look at this Bollinger Band squeeze. A Bollinger Band squeeze is when you get the Bollinger Bands trading within the Keltner channels. The Bollinger Bands are trading inside the Keltner channels. Bollinger Bands are in red, Keltner channels in green. Very tight neck forming here. I think we're breaking out in the next couple of months, in the next couple of weeks probably on energy. Let's go to a weekly chart. We kind of broke support last week on energy. We broke support. So no need to go rushing in here. This did not hold. Disappointing price action last week. As a matter of fact, disappointing price action for the past 2 weeks. But I do think that they are going to be, this is going to be a winner. And names such as XOM and Chevron are probably going to be winners. This is not Chevron. This is a weekly chart. Lethargic at best. Do we have a Bollinger Band squeeze setting up here? We do. We do. These names report earnings on Friday, both Chevron and Exxon. The other sector that I like quite a bit is the financials. Now you may be saying, why? How are they going to benefit? The reason is that when was the last time you saw a big IPO? When was the last time you saw a big merger and acquisition that wasn't blocked by the DOJ? It's been a long time. So what President Trump is promising to do is basically what he did this first term. That's to cut regulations. If you cut regulations, that opens up the floodgates of M&A. And that is the lifeblood of stocks such as, primarily, my favorite in this space is going to be Goldman Sachs. I haven't looked at this chart in a while. I spoke about a potential breakout back here. I was right. Let's get rid of this. So Goldman Sachs looks like it's front running, along with the rest of the banks, a Trump presidency. But they always do good no matter who's in office. But I think a Trump presidency is going to be very, very bullish for the banks. It opens up M&A deals, IPOs, and whatnot. Defense. What the heck is that? Oh, the euro. The euro made higher highs. So that France downgrade by whatever firm that was, Moody's or whatever it was, that was priced in. So that's rallying back now. We may be seeing some weakness on the dollar at current. I forgot where I was going to go. Oh, DFEN. DFEN. Defense. Either way, defense is going to get more money, but I think that under a Trump presidency, it's going to get a lot more money. We have way too many hot spots around the globe right now. China is just blowing out their military, and we need to be a major deterrent. We have lost our way, and I think defense is going to be a big, big player. We are owners, and I've been buying on this pullback, a nasty pullback at that, the shares of Boeing. Now, I'm bullish on it. They've thrown the kitchen sink at this stock. And I think that we are probing a low on Boeing at current. This is not what I wanted to do. This is not TrendSpider's fault. It's my fault. We've already formed a W formation on Boeing, rallied, pulled back. If they hold this support level, that would mark a higher low on Boeing. And if they break this out and they rally it up and through this resistance level here to new higher highs, I think that in the next couple of years, we're going to 400 a share on Boeing. That's why I'm buying it right here, right now. And it's one of our larger positions. So they have union strikes. They've been downgraded. They have a shelf offering to issue more shares. All the bad news possible has hit this stock. Guess what? It's up on the month. So you have new management. They're in there. Old management is gone. And I see brighter things ahead for Boeing as soon as they get the strike out of the way. And plus, you get a Trump presidency. Now, I am not getting in front of my skis about a Trump presidency. I want it. The question is, do we get it? I am not overly optimistic. Lord knows what could happen. Let's talk about Coinbase. I think crypto is going to do very, very well. Bitcoin, a dollar cost averaging every Monday. But Coinbase, I think, is going to be monopolistic. How anybody does not own this stock right now is beyond me. We own it. I plan on adding more. They report earnings soon. They have broken out on the month. And if they take out these highs here from back in July, we're going a lot higher. we're probably going to be up in the 300s before you know it, very, very quickly. So watch for continuation breakout, a recapture of 274 per share. That's going to send us up to the 300s like that. Let's do some chart requests and call it a night. All right, what do we have? Why doesn't this show the comments? Here we go. Okay. We got Oxy. LHX. CGC. And MCD. Okay. Let's knock them out. 707. Let's begin with Oxy. You have a Bollinger Band squeeze on a monthly time frame, a lot on these energy stocks across the board. So they're setting up for a continuation move up higher. Now on the month, it's struggling a bit. It was higher. Now it's faded a bit. I wouldn't be a buyer if they close out the month down below 51 bucks a share. But I think you could start dollar cost averaging in here, nibble, 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 and wait for the breakout. I think that these are going to move up higher. This is a monthly chart. Let's go to a weekly view. It looks like they could be setting up a W formation. As a matter of fact, I'm just noticing this. We were in a downtrend channel. We broke out in September, retest 1, retest 2. Man, if they take this up and above 56.50 per share and close out the month there, either this month or next, it's game on to the upside. So right now, I'd be a buyer here. I'd be accumulating a position. I would not get aggressive. I would be very, very aggressive on a close above $57 per share. But nibble, nibble, nibble down here. The longer the consolidation, the greater the validation of any breakout. And you have higher lows. Now what you need is a breakout to new higher highs. Bullish. LHX. Level 3 Harris. I mean, great earnings report last week. Partnership with Palantir. Let's go monthly view. I think that what I would do here, we only have 4 trading days left to go in the month. All right, let's make the assumption that we're going to close above 250, which puts us above or closes above this upper band of resistance. Not unreasonable. What I would be looking to do going into November, can you believe November? I'd be looking for a pullback to 251.85 per share. On that retest, I would begin bull operations, and then I would be adding more aggressively on new higher highs, new 52-week highs, multi-year highs. Bullish. CGC, Canopy Growth. Boy, oh boy, oh boy, oh boy, oh boy, oh boy, oh boy. What the hell's all this noise down here? Jesus Christ, this is dead money. Sorry for the awkward pause. Let's go weekly view. Yeah. So it looks like what's setting up here is a higher low. And we broke out last week. I would check out the short interest here. CGC. Come on, give me a break. You have 16% of the float that's short for a total of 9.23 million shares. You have a couple of days worth of a short squeeze here, not much. I was hoping for a much bigger short position to get a short squeeze. All right, so that's off the table. It looks like it's a buy. It looks like it wants to go up. I think President Trump was talking about legalization on a federal level, and that will certainly help the banks because currently they can't be involved with these companies. And I'm not sure. I'm sure it's going to be good for the growers as well because they'll have access to the banking system. I don't know what they do right now. So Canopy Growth looking good here. I did not expect to be saying that, but it is looking good. So bullish on Canopy Growth. MCD. So there's two ways of looking at this. MCD, they got on the wrong side of the political spectrum, and the deep state came for them. So all of a sudden, a day or two after you have the PR out of the Trump campaign, all of a sudden they have E. coli popping up all over the place. So coincidence? I don't believe in coincidences. Now, the other way to look at this is that with RFK Jr. involved and the president's backing of a healthy food program in the United States, McDonald's is anything but healthy. Will this adversely impact McDonald's in some form or fashion? So is that why we got this correction? I don't think so. I think it's the former. I think it's the E. coli scare. I think this is temporary. And if they pull it back to this rising lower band of support down at around 265, I'd be a buyer there. Right? I would wait, though. This is a pretty bearish outside reversal bar last week. It looks as though it wants to go lower. So I'm not catching a falling knife here. I would wait. So be very, very careful with catching this one. I mean, this is broken. Really. Here's your uptrend channel. It's gone. They could rally this back. Don't get me wrong. Rally it back up to 307 or so. Then it rolls right back over again. I would avoid this. All right, folks. Thanks for being here. Don't forget, like, subscribe, whatever you do on YouTube and Twitter, wherever you're watching this. Everybody have a profitable trading week. Thanks for being here. Don't forget, TrendSpider discount code below. Use that link, and I give it away free to silver and gold level members. Sign up today. I'll talk to you folks soon. Have an awesome remainder of your night. Be well. This throws my pen. Take care, folks.